Back, everybody. Our coverage of the coronavirus outbreak continues right now. Concerns over the virus send stocks plunging yet again today. This comes as governments move to restrict travel, close schools, and keep people at a safe distance. Trading was actually halted within seconds of the market opening, down more than 2,000 points. Ultimately, the Dow ended the day down just under 3,000 points today. Joel Johnson with Johnson Brunetti is joining us live right now with more on what happened here. Joel, thank you for joining us this afternoon. I guess I have to ask you, first of all, they're saying what this is the worst day since 1987, I understand. Why do you think that's the case here? What's happening?
Yeah, well, it's basically uncertainty, Mark. People do not like uncertainty in the market. And remember what moves the markets. It's not you and I. It's the big money traders that many times are leveraged, right? These big firms will borrow money to put into the market. And when the market starts going against them, they've got to sell more than they actually have in there to pay back the banks. And so it's just an exacerbating situation. It's the biggest point drop since '87. It's not the biggest percentage drop, but it's still pretty darn ugly out there, Mark.
Yeah, certainly not a good day, that's for sure. So I understand the Fed rate was cut last night. That apparently did not help things today. What happened there?
Well, it didn't help things. Normally, a Fed rate cut means there's going to be more money sloshing around in our financial system, which helps businesses. The problem is people are sitting back going, wait a minute, how bad is this thing really? Is this going to be another financial crisis situation? Because when the Fed hits something that hard, it makes some of us feel like, well, wait a minute, what's really going on here? Do we really know the worst news? And then, of course, the president said just moments ago that, you know, we need to be ready for this coronavirus thing to last maybe through August. So it's going to be a real hurt to the economy. For those people that are far away from their retirement, they should not be nervous. They should just keep plowing away, kind of ignore what's going on here and take care of your families. But for those close to retirement, it's a pretty scary thing.
Well, I know you're very good, Joel, at what you do, and it's a hard thing to ask a question like this because no one can predict. You'd be very wealthy if you could. But what do you think will happen here? What does the timeline look like? What can it take in a situation like this for stocks to rebound?
Well, historically, to get back up to the high when we go into a bear market, which is what we're in, it could take up to 2 years. Sometimes it's been 3, but for the most part, up to 2 years. So people really need to do a big reset and say, am I invested in the right stuff? Sometimes, Mark, what happens is people get into places like this and they go, I'm going to wait till the market comes back. I'm not going to change anything. Well, a lot of times it's not good to change things based on impulse and emotions, but they should at least get a second opinion and find out, are they set up properly in the first place? But I know it sounds cliche, Mark, but try to hang in there and not make decisions based on emotion. Get somebody that can give you an objective opinion, because people get hurt when they start acting on emotions, especially when it comes to investments and retirement planning.
All right, great information to keep in mind. Joel Johnson from Johnson Brunetti, thank you very much for always joining us here. We appreciate it. So much good information there. By the way, you can get much more on today's latest developments on the Channel 3 streaming news app. You can also rewatch our coverage. Just download the app on Roku, Amazon Fire, or Apple TV.